It's Monday, January 25th, 2016. I'm looking at a chart essentially of the bounce off of last Wednesday that we've had in longs. And I've got some measured moves drawn in here, but tonight I want to talk about the work of Jim Dalton, uh, who uses market profile as a guide to his trading but has his own books. And I want to point out some things that I use as an adjunct to the measured moves to determine intraday what's going on with trading. So the first background we have is we talk about intraday distributions, and the fairest price is basically the point at which there are the most touches on a 30-minute chart for that day. And we see that on Friday we had a 10 wide fairest price, and today another 10 wide fairest price developed, and we had another 10 wide fairest price down here, and so on, a 7 wide down here. And these are all based on the most touches on a 30-minute chart intraday. Now, there's also a concept of a distribution. That fairest price represents the theoretical maximum volume point for the day, and then a distribution will form around this. So today was basically one distribution in here of volume around this fairest price. And fairest price is usually a zone, like in the case down here I have a 10 wide, but I believe there's probably right in there another 10 wide. Let's see, 1, 2, 3, 4, 5, 6, 7, 10, yeah. So it usually it's not a single point, it's usually a zone, and in this day the zone was about right there. What I'm usually doing as my convention is if we're above it, then I pick the top point of that distribution. If I'm below it, I pick the bottom point. I just want to know whether we've touched it. Now, when I'm talking about these distributions with the maximum concentration of volume, I'm thinking about them as a volume test. And so I'm not really thinking about them exactly the way Dalton does. I think price goes to those points and uses them as a volume test, and basically is either able to overcome them, in this case get above it, or as today turned out, traded below it. Dalton views them as anomalies, that the wider ones, like these 10 wide, and starting about 6 or 7, they start having implications for that day's trading. And the implication is for Dalton that they form an anomaly that has to be revisited. I think of them in a different way. I think of them as a place for a volume test. And really not much more than that, although I do subscribe to his idea as anomalies accumulate, the probabilities that you will revisit those anomalies become greater. There's no specific numbers around that. I just track them, and when they start stacking up pretty good, then I begin to think there's a higher probability that they'll be revisited. Now, Back to talking about distributions. On Fridays, you can see two fairly tight distributions that formed, and these are kind of unusual in the sense that there's usually separation between distributions, but we had a lower distribution and an upper distribution on this day. We go back to Thursday. We traded up. We tried to form a distribution here, but it just didn't get wide enough, and we fell back into essentially a trading range earlier in the day, and then we formed a distribution in this area. You can see the separation between the distributions in this case. And then I'm going to pull this back a little bit so we can see Wednesday a bit better. Wednesday, we traded down, formed a bit of a distribution, traded down a little bit more. This is essentially a distribution as well. Neither place did we stick. And then finally we developed a distribution here, but this was just going to be a trending day after here. There's reasons for this. This was a big volume test on the whole day of a previous swing point low. So the volume built on this day, and we got a push up into another distribution and up into another distribution. A definite trending day with, if you consider this and this as two separate 1, 2, 3, 4 distributions. We were able to stick price up because of the volume into this upper distribution, even though normally we want those to get wider. And so I want to zoom in on today and show you how I use the information about these distributions to make predictions about what's going on for that day. Okay, Friday we formed this wide distribution. The overnight traded up to a point, and then that basically didn't hold. There was some little measured moves that formed overnight to the short side, and a little bit more than what I'd like to see. There was actually a couple of distributions. Talk about those in a different context. So we formed at the opening a measured move that with first and second targets. But how did we use those clues about the Ferris price and volume to see what was going on today? Well, we opened here, traded up, and then basically traded all the way down and back up to here in the first half hour. And I parenthetically will say that all of these are based on the 30-minute because of we want the widest point of 30-minute touches. And we failed, came down. We're basically in intraday testing this as a swing point low for a test to go lower, and we got some lift. We also traded into the first target. Prior or after this was a confirmed, at this point we had a confirmed measured move down. We traded into the first target, and then we got some profit taking that eventually built some momentum to go back and test this same area again, a second test. And we failed again to break higher, so we're testing that fairest price from Friday, and we can't get back above it. Well, that's basically telling us for the day, without looking at any measure moves, that we're going to test down. We can't get back up into this distribution, that we're basically in this distribution. So at that point we look, well, our measured move that's verified says that we'd go down to here, which would be kind of an RTRG test of Thursday's highs. But here's where the adjunct of some of Dalton's teachings come in. The volume is down here. And so that would dictate, and the volume on this day is just not up here, it's down here. So that kind of tells us where a likely destination for the day is. And what we're going down is to test this fairest price. Well, essentially on this bar, we did touch the fairest price, and we've tested it. So in this sense, according to Dalton's ideas, and I do subscribe to the idea, this test is pretty much done now. We've touched this point, and this anomaly is eliminated. So we'll go ahead and eliminate that anomaly. And today we eliminated this anomaly. And it turned out that this test is initially bouncing here. We'll see what the overnight brings, because we have Asian and European sessions, and they will overcome, even though you can't really consider it a volume test in the overnight. We got an initial bounce, but they will prevail. And if we go down in those sessions, then we'll probably go lower tonight. But at this point, we're setting up to see what happens, and we're stopping at this test. Okay, now we've talked about distributions and kind of the center of that distribution as the volume test. Now I want to talk about one other idea that Dalton has. That's basically the volume of the New York Composite for the day. As you can see, this is the 31st of 2015, and we had the Christmas type volumes, and the top represents total volume in billions of shares. So you can see that immediately on the 4th, when the market started trading again, that volume started building. And in fact, last Wednesday I talked about being a major swing point test. Was actually a swing point test for the October 2014 low. And the volume at this point actually that's not true. That would be the the test of the August lows. This August 2015. And so this was a swing point test of that low. And the volume you can see is just bigger than any other one. I break these into 30-minute segments just to see the relative volume for the day. And you see the same pattern all the time. You have heavy volume at the beginning of the day, it starts tapering, 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 builds in the last half hour, and then builds even more in the final half hour. And that's pretty much the pattern on each of these. You can see today didn't represent the kind of volume that we've been seeing on this. Now, if I pull this back into a daily, you'll basically see that this volume has exceeded anything basically in the last year, except for the quadruple witching, and as it turns out, the August low. That is August the 24th, which represented the low on that, and so this is basically the test of that volume. So this concludes using Dalton's teaching around market profile as an adjunct to measured moves.